Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar traded cautiously as the markets looked ahead to Thursday's US non-farm payrolls report, which is expected to show 114,000 new jobs added in June, with employment holding at 4.3% for a fourth straight month. Investors also weighed comments from Fed Chair Kevin Walsh and renewed uncertainty surrounding US-Iran negotiations. However, the dollar index is still holding well above 101 at 101.35, and the Federal Reserve's maintaining a more hawkish stance. Markets have shifted from pricing rate cuts to expecting at least one rate hike before the end of 2026. Turning to the technicals, we're looking at the Aussie. It still remains somewhat fragile in terms of momentum, and therefore, as it flirts around the midway point, I still feel that this engulfing candle is a good sign that the bulls are ready to take this market higher, and no doubt will continue to defend the bottom side of this range around 68.35.45 if revisited. If so, this market does maintain above here, and I'm looking up towards 69.5 to 70 cents as a potential target. Turning to the euro, well, the market was again whipsaw but still hovering around this 114 handle as trading activity thins ahead of a pivotal week for the US data accumulating on Thursday for the US non-farm payrolls report, released a day earlier ahead of the Independence Day holiday. Meanwhile, despite the ECB's recent rate hike, the euro continues to struggle amid weak demand as the Federal Reserve's more hawkish stance has kept the dollar somewhat firm. But looking at the technicals, 113.40.50 still plays a very important part here, and while intact, could eventually see a rebound to 115 to 116 as a potential target. So I'm not bearish at present and keeping an eye on these technicals. A very whipsaw price action when it comes to dollar yen, as we can see here. We had a high of 162.59 and a low of 161.11 and rebounds quite aggressively. No doubt there is much talk that intervention risks remain elevated, and no doubt with the market getting thinner towards the US holiday, could see another one of these candles coming through. Quite a big candle for the day, considering how much it's taken out over the last few days, and we could see one of these. So therefore, my downside call is at 160 to around 158 and reassess from there. Turning to sterling, well, the market is still somewhat bullish, as we can see here, after Governor Andrew Bailey reaffirmed the bank's cautious data-dependent approach, signalling there is no urgency to change policy despite lower oil prices. Keeping to the technicals, though, the market is firmed up, so let's see if we can target 133.5 to 134 and reassess from there. Wrapping up with commodities, well, the market again is improving, and therefore could see a rally onto this trend line, which is seen somewhere around 4,160 and reassess. And oil, well, the market is still hovering above this key level at $67 a barrel. We could see demand return. Let's see if we do. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report, and I hope you enjoy a great start to the day.